How to refinance your home or rental property and pull out tens of thousands or possibly even hundreds of thousands of dollars in cash. Also, we'll be talking about some of the benefits of actually refinancing a property. All of that to be covered in this video. Let's get into it right away. But really quickly, if you haven't done so yet, make sure to hit the subscribe button right down below the video, and feel free to share this video or any others here on the channel with your friends, family, and social media, or anybody that may benefit from this information. Thank you once again. I truly appreciate it. Let's get right into this. So of course, anything that I talk about in this video is not advice in any way, but rather we're talking through this on a general basis, just so you have an idea of what are some of the benefits of actually refinancing your home and or rental property and the process of actually doing it. All right, so with that being said, let's talk through it. So here's the thing. Refinancing can sound a little bit confusing. In fact, some people may wonder, what does refinancing actually mean? Here's what it is. Basically just getting a new mortgage on your home. That's pretty much the only thing that it is. That's literally all it means. Refinancing as in getting new financing on your existing property. Now, this can be done on your primary residence where you're currently living if you have a mortgage, or even if you don't have a mortgage. The same thing can be done on investment property. Now, here's the thing. A lot of people who own rental properties, investment properties, don't even know that you can refinance them. Yes, absolutely. You can refinance an investment property, like a home that you maybe own and maybe you rent it out on a monthly basis to your tenants. Yes, you can absolutely refinance that property as well. Now, of course, there are factors that go into refinancing. Like I said a minute ago, I don't know your exact situation, so here's the thing. I can't give you advice saying yes or no, you can absolutely refinance. But here's the thing. On paper, yeah, you can refinance. But of course, you're going to need to submit a lot of personal information to your loan officer, and then they will determine, based on your situation, can you refinance? But here's the thing. Let's talk through this process. Now, if you've ever received a mortgage before, if you've ever gone out and gotten a mortgage, maybe on your primary or maybe a rental property, anything like this, you probably understand the process a little bit. Here's the thing. You'll basically need to turn over your entire life story to your loan officer, right? You've been there, you've done that. They need to see essentially everything about you. Your income, your bank statements, maybe in some instances, even some your credit card statements. They want to see like your tax records. They probably want to see your tax return. They want to see basically everything about you to know that you are good, as in you can pay back the mortgage that they're about to give you. This is very important. It's just the process. Regardless of where you go, they're going to want to see a lot of information. So that's basically step one, is you pretty much want to get in contact with somebody probably in your area. Maybe it's a big bank, maybe it's a small local bank. For the most part, it doesn't really matter. But what I want to encourage you to do is call around, connect with somebody that you really enjoy talking to, somebody that actually understands you. Here's the thing. I've called around to numerous different banks in my area, and I'll be honest with you. I've talked to some people and I thought, okay, I learned something from this person, but you know what? I would never want to work with that person on a professional basis, just because we didn't necessarily connect on that level. And I've also called around and talked to people where I've got off the phone and thought, wow, that was a great conversation. We really connected. I liked talking to that person. I would love to work with that person going forward. I've called many, many banks in my area just because I enjoy talking to these people, asking questions, and getting to know the process from the standpoint of different banks and institutions. They all do it essentially a little bit differently, but for the most part, it's the same process regardless of where you go, but it's a little bit different. But here's the thing. The personal connection that you have with the person you're working with, as in your loan officer, the person who's going to see every last penny that is in your name, yeah, you'll probably want to have a good connection with that person. So that's probably step one. Call around to some local banks, big or small, maybe some credit unions, things like that, some mortgage brokers, and just connect with somebody that you like, and then start moving forward from there. All right, next process. or the next step in the process. They're going to want to see a bunch of your information, as in all of your bank statements, your income, your W-2s, your tax returns, all of this, your 1099 income, anything like that. Maybe you're somebody who's retired, or you're living and you're receiving Social Security. Maybe it's retirement disability, maybe it's survivor's benefits, something like this. Again, they'll want to see that information as well. They want to see money coming in the door. If you have a rental property, they're going to want to see your payments, as in how much are you getting in rents received each and every month. They're also probably going to want to see rental contracts, as in a lease agreement with your tenants. They'll want to see any expenses on the property. They'll want to see property taxes, insurance, all that kind of stuff as well. They'll want to see all of these records. So just be prepared. They're going to be asking for a lot of your information, but you'll need to know all this stuff. All right, going through the next steps. From there, if they decide that, okay, based on your information, you can probably get a mortgage and refinance this property, what they'll probably do then is send out an appraiser to the property to get an idea of what it is worth. Now, you can probably give them your ideas, but realistically, they are not going to give you money based on our personal opinions, right? Because I don't know about you, but my house is always worth $10 million, right? I mean, it's not, but I'm just saying, if somebody's going to give me money based on how much I tell them, I'm going to tell them it's worth a lot of money, right? But of course, my house is not anywhere near $10 million, not even close, just being real with you. I'm just saying, they will want a professional appraiser to go out and appraise the property to get an idea of what the property is actually worth. At that point, the appraiser will come back and give the loan officer all of that information, and then they'll say, hey, this house, based on my appraisal in this market right here, right now, is worth $100,000, whatever. Let's just say $100,000, for example. Well, then the loan officer will come back and say, hey, great, congratulations, your home is worth $100,000. And depending on if you have a mortgage on the property right then and there, or if you don't have a mortgage at all and you own the house free and clear, they can come back and they say, well, if this is your primary residence, we can give you maybe like a 20% loan to value on the property, right? So basically what they're going to do is they're going to say, you need to keep 20% equity in the property, and we'll give you the other 80% back in cash in the event the property is 100% paid off. Now, if you already have a mortgage on the property, they will need to pay off your first mortgage, right? Pay off the mortgage that's on there right now and replace it with the other mortgage that you're applying for right here and there, right? To refinance the property. So that's what they would do. But if you have the house fully paid off, I mean, you could pull out potentially tens of thousands or even hundreds of thousands of dollars with a simple refinance. Pretty cool stuff, right? So if you're in a situation where you're looking for some money right now, this may be a good way where you could tap into a lot of money, like a big lump sum payment all of a sudden. So once they get that appraisal and they go through that process and they look at it, they can probably come up with a figure of how much money they can actually give you. Now, one side note, if you're looking at an investment property, as in you want to refinance maybe a rental property, let's just say, for example, it is fully paid off and it is worth $100,000 as a function of the the appraisal that came in. Okay, so they came back and they said it's worth $100,000. Since it's a rental property, in most instances, they're going to require you keeping a minimum of 25% in that property as equity. Now, maybe based on the bank, you might be able to get it down to 20%, but for the most part, 25% is about the minimum most banks or lenders will go when it comes to an investment property, because they see these as higher risk properties. They see them as, well, if you get into a bad situation, you're going to let your rental go far sooner than you're going to let your primary go, because you need a place to live, right? So if you have come across a hard time, they're going to say, well, you're going to let your rental go back, right? So they see this as higher risk. So they'll likely make you keep 25% in. But here's the thing. If it's fully paid off and it appraises at $100,000, you could possibly walk away with $75,000 in cash from that property. Pretty cool, right? I mean, that's a nice chunk of change right there. Many people would be very, very happy to have $75,000 in their pocket right now. I don't know about you, but that'd be pretty nice, right? So that is one more thing to take into consideration. But once you get the appraisal and you're good to go for For the refinance, then you start looking at, okay, well, what do we need to do next? Well, at some point throughout that process, they're going to want you to lock in a rate. Now, of course, there's tons of different financial products out there, as in different mortgages. You could get a 15-year fixed, you could get a 30-year fixed, you could get an adjustable rate. There's so many different products out there right now. But I think generally the most popular would probably be like a 15-year fixed, or even more popular, a 30-year fixed. I think fixed mortgages are probably the most popular going on right now. And ultimately, it's the safest. Because if you get into an adjustable rate mortgage and all of a sudden rates jump up, well, then your payment jumps up too. That can be very dangerous going forward. So let's just say that you lock in on a 30-year fixed mortgage. The cool thing about that is at some point throughout this process, as you're working with your loan officer, they're going to say, hey, rates are down today. Do you want to lock? And you can say, yeah, that sounds good to me. I don't know. Sounds good if that's what you recommend. And they'll probably say, we haven't seen rates this low in, a week, 7 days, I don't know, 2 weeks, something like that. You might want to lock now based on how it's looking. Rates might jump up again, but you might want to lock. And they'll go out and they'll lock your rate. Now, typically those locks last for, I think it's like 30 or 60 days. It's something like that. But they will lock for a certain amount of time for you, that rate, and they'll guarantee your rate when you tell them to lock it for you. Pretty cool. So once you have a locked rate, you have the appraisal in, everything's good to go, they've approved it, and they said that you're good to go to refinance, then it's basically just a process of going through all of the due diligence, as in getting all the final paperwork together, and then setting up a closing, where you basically go in and sign your name about 30 times. Have you ever done that? You go and sign about a bunch of papers. There's a huge stack of papers, and you probably need to sign about 30 times. And then after that, you're good to go. You have a new mortgage on your property, hopefully locked in at a much lower rate, and you get to walk away with a check in hand, or maybe a wire or a deposit into your bank account, of a lot of money that you just pulled out of your property, because you pulled out in the form of a refinance. Maybe you're refinancing to get a lower rate, or maybe you're doing a cash out refi where you're actually pulling cash out of the property. That is something you can also do. Now, here's the thing. One more note. With the current rates and everything going on right now, if you got a mortgage years ago, maybe like 5 years ago, anything like that, 4 or 5 years ago, or anything longer ago than that, if you were to refinance right now, you could probably lock in a much lower rate. Rates are pretty low right now, but it's not going to last this way forever. So if you're looking at potentially refinancing, you might want to look into it while rates are still low. Take advantage of some rates right now, and you can probably lower your payment as well as a result of refinancing. So pretty cool stuff. One more thing I want to throw out there. If you happen to be refinancing an investment property, a rental property, something like this, a commercial property, just recognize rates are typically higher. So not only do they require you to keep more equity in your property, 25% or more in some instances, they're also going to make you pay a higher rate as well. So a lot of times it's about a point higher than you would probably get on a primary residence. Again, because they see it as higher risk. So I hope that makes sense. But either way, if you have an investment property and you pull out some cash from it and you do a refinance, or you do a cash out refi on a investment property, here's the thing. You're ultimately pulling more cash out of your property. You're probably getting a little bit less cash flow each and every month, but guess what? If you were to able to refinance the thing and you bought it, let's just say 10 years ago at $100,000 and now it's worth $150, and you pulled out all of that cash, you're probably in the point where it is now an infinite return on your property because you've pulled out all of your initial cash. Therefore, you're at the point now where you no longer have any of your initial money in the deal, as in your return on investment cannot be measured anymore. It is no longer measurable simply because it's an infinite return. You no longer have cash in the deal. Therefore, you're in like the best spot possible, right? Your cash flow is a little bit less, but either way, you have no money in the deal. You've pulled out all of your money. That is what they call an infinite return. Make sense? Pretty cool stuff, right? So anyway, of course, I can talk about this way more in multiple videos, but here's the thing. I wanted to make this one kind of short and sweet, straight to the point, and talk about a refinance on a primary and or a rental property. I mean, it's something that you can certainly consider. There's a lot of people that can do this. I mean, it's not that hard. It's basically just like qualifying for a mortgage. It's essentially the exact same thing. It's just a matter of, rather than buying a new property and getting a new mortgage, you're basically just refinancing, getting a different mortgage on an existing property that you already own, replacing the other mortgage. if that makes sense, right? So anyway, subscribe to the channel by hitting the button right down below the video. Totally free to do so. And I'm back every single day to help you out or do whatever I can to be here for everybody in this community and just share more information and maybe get you thinking a little bit. Seriously, there's so many strategies out there right now to get your hands on some money. And this may be a good way to get your hands on a lot of money going forward. Tens of thousands or maybe even hundreds of thousands of dollars based on the actual price of your home, right? Pretty cool. Anyway, thanks again for your support. I truly appreciate it, and I'll see you again later.